Hello and welcome to another edition of Market Briefing. I'm Martin Bakkerdax, European business editor here at the IB Times UK. And UK is definitely the focus of the market's attention today. It's the first kick that many investors have had at the market since the downgrade of Britain's AAA credit rating late Friday evening by Moody's Investor Service. It's a one-notch downgrade, and it's not terribly surprising, but the timing did catch investors a little bit off guard because it comes, of course, ahead of and not after Chancellor George Osborne's critical budget statement on the 20th of March. Now, the market impact hasn't been as extreme as maybe some had first anticipated. We are looking at a fall in sterling. There's no question about that. It's approaching three-year lows against the US dollar, and as a trade-weighted basket, sterling against a group of other currencies around the world is trading at a 17-month low. But gilt yields haven't moved so much. They're trading at around 2.12%. That's the benchmark 10-year, and that's only about 2 or 3 basis points higher than they were trading on Friday afternoon. Effectively, what investors are factoring in is that the Bank of England will probably at least continue to support the gilt market with its asset purchase program as it stands, and may even increase it because, of course, we know that Bank of England Governor Mervyn King voted last week to increase it by 25 million sterling. So bonds will get support. Stocks in representation of the FTSE 100 generally earn their earnings outside of the United Kingdom, so the downgrade has no impact. And really, investors can only look at the currency markets in which to exercise their concern about the fiscal situation here in the United Kingdom, and that's why you're seeing sterling falling down. Broader markets, as I say, really haven't been that moved by the decision. The FTSE 100 is about 36 points higher on the day. European markets are doing well. Investors have their eye on the second day of elections in Italy. Don't really know the outcome just yet. We'll keep an eye on it and ultimately, of course, assess the impacts of financial markets when the vote comes through a little bit later today. Here in the UK, one stock we are keeping an eye on is Pearson. The publishing group delivered its full year 2012 results. They say that 2013 is going to be relatively flat. They've had to initiate a 150 million sterling restructuring program as a result, but their new CEO, John Fallon, says critically the Financial Times, one of its key assets, is not for sale. So the Pinkin looks safe, at least for the moment. That's it for now. We'll see you tomorrow.